going on, fellas? What is going on? Gang, gang, gang. Welcome to the Santana 90s channel, baby. Let's go. What's going on, fellas? Explain to you what is a pip. You know what's a pip, Oliver? Because you're probably watching my stuff right now and you don't know what I'm talking about. You know what's a pip, Oliver? Nah, not really. Alright, let me pause this. A pip, look. This is a pip. You, that movement, right? We just call it pip so it's easier to count and all that stuff. But you see, alright, let's start with this. See how it has, let's see, well, let's start with GU. See, it has a 1. So right now, basically, 1 pound, this is pound versus dollar. Because the three first letters is one currency, and the other 3 letters another currency. So GBP, that's the pound, the British pound. USD is the dollar, the US dollar. See, if you hover over it, it says it, British pound, USD dollar. So now a pip, this is what the pair is going for. 1.332020.1, 0.5, 0.6. It keeps moving. That moves constantly because the market is open right now. So hold up. So we call right now on this pair on GBP USD. This, when you see where it says 20, oh, I don't know if you see it. Can you see it? Can you see these numbers where I'm pointing at right now, or should I make it bigger? I don't know if you can see those numbers. Oh, you can see. All right. So those numbers right there, right? It says 1.3. But why can't I see it right? Let me see. Hold on. I don't know if I can see it. Let me see. Oh yeah, you can see it. Okay, it's because I was watching from Streamlabs. I thought you couldn't see it clear. Okay. So yeah, you can see. All right. So you see 1.3321.6. This last number, see how it has 4 numbers after the decimals? It has 5 numbers after the decimal. But this one we don't worry about. We call it a pipette. This really we don't worry about. This number mostly is these numbers, the 4 numbers after the decimal. But really the pips come from here. When you see his 3321, when it goes from 3321 to 3322, that means it moved up 1 pip. So that, it went up. See right now, see 3323, it moved up 2 pips. So it moved up now 23. Oh shit, 24. It moving is going up, Mayo. DJ Dav is going up. 3324. See now it was 21, 25. God damn it, what's going on over here? It's gaining momentum. Yep, look at that. Look at that. Woo. But see, that's what we call pip. It was at 21, now it's at 25. So from 21 to 25 is 4 difference. So it's 4 pips. So now it's 3 pips. So that's what we call pips. Hey, Crankin', what is going on? Crankin' in the building. What's up, brother? But yeah, so that's the pip. That's what we call pips. So now if 3324 goes to, like, let's say 3337, that means it's 13. So that's 13 pips. And the only difference here, see how this one has 3 numbers before the decimals, and only has 2 numbers, or really 3 numbers after the decimal. It's because it has a JPY pair. See, this is the same thing. GBP, JPY. This is the 3 letters again, the same as this one. is British pound. Now it has another different letter than this one, 3 different letters. So it's JPY. That's the yen, the Japanese yen. That's money. We're talking about money. This is the the British pound, the U.S. dollar, British pound, Japanese yen. So now the yen, the Japanese yen pairs, they only have two numbers. Like those are numbers we really count. Two numbers after the decimals. We don't worry about the third one. That little one. That's the pipette. You see how this one here had 4 numbers. This one only has 2 numbers. But here the pip count is right here between, right here. The last 4, the last 2. Okay, so and the JPY pairs is the first 2 after the decimal. So this is the pipette. This little one is the pipette. So that's when we count. See, so it went from, I don't know what it was, 58 to 57. So it went down 1 pip. So it's negative 1 pip. It went down 1 pip. See, again, it went down another pip. So that it went down 2 pips now. See right here how this goes red. I have it when it's red. When this is what we call candle. When it's red, I have it that when it's red is when it's going down, and when it's green it was when it's going up. Oh yeah, I get it. So pips just show the difference between the currency. Yeah, like how much it moved. Basically the movement. If it was at 1.3321 and then it moved up to 133.35, that means it moved 14 pip. So we call it, it moved up. Oh, that's the movement we talking about how much we caught. Oh, I caught 14 pips. We talking about that movement. We caught that movement. Oh, I caught 100 pips. But then when you get into a trade, lot size. It all depends on the lot size. The crazy thing about it, you could catch the same amount of pip. Let's say 5 people. Let's say they all caught 100 pips. But depending on the lot size, on the same pair, because different pairs pays differently too. But let's say they caught 10 pips on the same pair. One person could have made $1, right? $1 on that 10 pip they got. Another person could have made $10 on that, 10 pip that it moved. Another person could have made $100. Another person could have made $1,000. Another person could have made $100,000. Because it all depends on the lot size they got into. Lot size is how much, basically you're risking. There's like different lot size. I don't have do I have that? No, I don't have my MT4 up right now to show you what is a thing, how it looks. But it's like you could buy different lot size. There's like standard lot size, mini lot size, and stuff like that. You should download MetaTrader 4, Oliver, and start practicing this shit. You're my boy. I'll teach you some of this stuff. Oliver, Oh, man. Oh, damn. Look at the 1 minute. DJ Dab, you doing? That GU about to drop. Sunday trap day. Exactly. Sunday is trap day. They trying to trap you in there, man. Oh. But yeah, Oliver, this is candles right here. Look, Wyatt. This is what we call candles. I don't know. Can you see that wick? Let me see if you can see that wick or not. Can you see that? Oh, you barely can see that wick. Holy shit. Oh yeah, you see that little green line. Okay, you do see that little green line. Okay. So look, see? Let me zoom in so you can see it. See, this is a candle, right? I don't know why it has that hover thing. Okay, there we go. See? This is a candle. You see that little wick? This little line, we call that a wick. This is basically the candle. See, it has a wick on this. It has a line on the bottom. This is a wick. Let me see if I can draw it. I still haven't really learned this thing. I'm still learning the trading view how to draw. See in there, that's a wick. That little line right there, that's a wick. Alright, delete. Oh no, I can't delete it. What? How can I delete it? God damn it. Don't delete. Oh, erase. There we go. But yeah, that's a candle. I mean, that's a wick. Yeah, looks like a candle. Exactly. So that's a candle. This is a wick. So a the purpose of the candle, you could change how it, you could change all of this stuff. Look, you can have it like this. You can have it like this. There's different type of way you can look at the chart. You can have it like that. You can have it like a line. But I like the candles. There's a lot more stuff. But oh, this music is a little bit downy. A little downer. What the heck is wrong with this song? So, but yeah, this is a candle. This is a wick. You see this big body, right? What this means, look, right here, the bottom of this big, the candle basically, on a green one, since it's going up, I have it green color. When it's a green color candle, it means that the price was going up. When it's a red candle, it means that the price was going down. So let's see right here. See the green. All right, let's start right here. That means right here, the top of the red candle of the body, the top of the red candle, that's where the price opened. Let's say we on the 1 minute. So when the 1 minute started, that's where it opened. And the bottom is where it closed. So now let's say after 1 minute, it's gonna jump to the next candle. Let's say it was 9 o'clock. I don't know. Let's say it was 9 o'clock. So this was 9 o'clock. So now let's say it's 9 o'clock, 9:01. Since we're watching the 1 minute, 9:01 is gonna go to the next candle. So see, it finished right here. So right here it opens. So it's green. So it means it's going up. So when it was 9:02, it probably went all the way up here and came back down. But when it was 9:02, it finished right here. So it goes to this candle. So it opens right there. Boom, went down to here, went up. It went to 9:03, so it closed right there. Boom, open right here. It went a little bit down, it went up, it closed right there, 9:04, boom, and it just continues like that. So the bottom, the body of the candle, the bottom was where it's open on the green, and on top where it closed. For the red one, see how it opened right here on the green, closed right here. So on the red one, it opened, it's the opposite, because it's going down. So it opened right here. So the price opened right here, but the price is getting lower than when it opened. So it makes the candle turns red. So that's why it goes down. So that's why once the minute passed, it closed right here. And just vice versa. See right now, look. This one closed, it went all the way up, went down. It closed right down here. So this one opened right here. See now the price is going up from where it opened on that 1 minute. So now it's going up. It can still go up and down until that 1 minute finish and goes to the next candle. That's when it tells you the open and close. But you could all that thing is the same thing. It's just right now I'm talking about the 1 minute frame. You could change it to 3 minutes. This is trading view. 5 minutes, 15 minutes, 30 minutes, 45 minutes, an hour. So it just depends on what you look it on. Oh yeah, I get it. That's cool. Hey, I like that you get it. Yeah, so it's not hard to read. Like once you start practicing, you will get it. It's not that hard to get it. It's just practice. The more time you spend in the markets, the better. Because you're going to start seeing how it moves and all that stuff. Let me see if you see it. Okay, you see it right there. You see where it says 5.00? That's the lot size. That's the lot size where you see 5.001. That's the lot size. I mean 5.00. That's the lot size. I could change that. Let's say, look, the lowest I could go, the lowest trade I could put in is a 0.01. See, the lowest I could put is that 0.01. So let's say I would have got a trade. I would have put in a trade as a sell. Like I would have clicked right here where it says red sell on where he told me on top over here on the top where he told me to put a sell on that 0.01. I would have won. I would have won $1 and 80 cents since it moved 18 pips. Because a 0.01 on GU, every pip that it moves is 10 cents that you win or lose. So it moved 18 pips. Plus the commission. It depends too on the broker you have, the spread. That's another thing is the spread. Like, okay. Like you see where it says right here GU, GBP. Let me see if you see it. Okay. Hold up. Clear up. There we go. There we go. GU, GBP, USD. On the bottom it says spread 7. That says spread 7. That's the difference. That's this right here. Look. That's let me see if it does it. Yeah, there's like two lines. There's like two lines where the blue is the bottom and the red is the top. So you never get in here inside of those two lines. When you put a sell, you're gonna get on the line of the top, the red line. When you put a buy, you're gonna get in the blue line. Wait, no, wait. When you put a buy, you get inside from the red line. Yeah. Yeah, from the red line. And when you do a sell, they put you from the bottom. And when you get a buy, they put you from the top. Because, they try, I don't know why they do that. But that's the spread. So it depends. Like every broker, a broker is like a bank. A bank has you could get any bank or there's different banks for you to put your money in. A broker for Forex is a bank, is basically a Forex bank, basically. So there's different for brokers where you can start an account and every trade or something they charge you a commission, or certain brokers charge you a percentage and stuff like that. So it all depends on the broker you have. So instead of winning, a $1.80, you could have won. I probably would have won. Let's say I have a 7 spread. I have they charge me probably, I think for 0.01, I think they charged me 10 cents. So I probably would have made like $1 and, let's say, $1.65 I would have made instead of $1.80. So it depends on the broker. Different brokers start charge different things. That makes sense. Oh, I understand. That makes sense. So in that same thing, the lot size, if I would have put a 1.00 instead of the 0.00, see, like right here, instead of putting the instead of having the 0.01, if I would have put a 1.00 on that same movement of 18 pips, I could have caught 180. That's would have been 180 minus the spread that it had, or minus the commission. So instead of 180, I could have made probably like 160, $160 on that 18 pip move. And it just keeps going up. If it was 10, that could have been 1,800. And if it was 100 lot size, that could have been 10,000 and 10,008, 800, whatever it is. So it just keeps going up depending on the lot size, depending on the amount of money you have in your account. That's depending too the lot size you could use. And always we always got to use risk management. So it's like, you're not gonna be like, let's say you have $100 in your account and you're not gonna use a freaking a 5.00 lot size. That's not enough. Some people, I think, can you make a purchase with a 1.00? I don't even know if you can make a 1.00 lot size with $100 in your account. I don't remember. I think it's after 200 you can make a 1.00. Because the thing is, if you get into it and on that, and if you reverse a little bit, because you have to have the margin. There's like a margin. I'm getting in too deep. I'm gonna end up confusing. Gonna end up confusing. Yeah, let me shut the fuck up. Hey, man, you're my boy, so I was trying to give you information, yo. But it's too much. That's the thing. It's too much. You lost me at Pip. remember, remember what's Pip? You forgot. Yeah, forex seems a bit more black and white. So to say, yeah, exactly. It's go up, it goes down, and it's really just patterns following momentum. Like certain stock, like there are certain times that we know, like let's say we know the Dow Jones is going up or something like that. So that movement could predict movement of that have USD pairs because it's the dollar. So that could predict the movement up or down because the Dow Jones is basically on the dollar, the company of the US, so it makes the dollar. So and stuff like that. You learn that as you go. There are sometimes pairs that you see that move together, or not move together. They mostly move identical. Like I told my boy about when he was talking about GU, that to check out GY. Oh, that was on YouTube. But on YouTube, he told me to check out GJ, which I use as short for GBP JPY. I told him, look, if you look at this, right, you see this moving right now? This is GBP USD, right? Look at this. Look how it looks. Boom, boom, boom. Look, this is a different pair, but it's the same thing. Pound versus yen. This is pound versus dollar. Look, did you see any change? Did you see any change? It still did the same. Look at this movement. Let's see. Might have made it bigger or it might have made it smaller. Let's see how many pips that was. Let's see how many pips that was. Look, this one made a 14, or if you would have held over here, it would have been 16 pips. So see, if you're smart enough, you when you see, oh, I see GBP USD is going on a sell. Boom, I got in there. So GBP JPY moves the same way. Let me get into it too. Boom. Instead of 18 pips, you would have made 34 pips because on the other one it was 18 and this one caught 16. So 18 plus 16 is 34. So instead of 18 pips, you would have caught 34 pips. Now we're talking about $3 and what I said, 34, $3.40 or $340 or 3,000, and it keeps going. It just everything just moves. Oh man, life is great. Life is great. Yeah, certain things, the more time you spend in the market, the more stuff you start learning. And I said I'm gonna make a chat. I'm gonna make a. I don't know if you're familiar with Telegram. I'm gonna make a chat and send like ideas there, and people that are interested in like learning about forex. I'm gonna make a chat for that because it's a little bit hard for me that I already don't have enough time to share the love. So it's like hard for me to be like, I'd be telling this person, teaching this person, then I'd be teaching these person, and then the same thing I'd be explaining here. That's why I make videos too, so people could watch. But certain people, I don't know, they don't. I don't know if they don't, people learn differently. Some people learn from videos, some people learn from reading, some people learn from actually seeing it. Some people want to kind of like do kind of like a one-on-one, which I can't do because I never have time, but I try to spread the love a little bit, you know what I mean? But I want to make a chat just for people that are interested in Forex. And if they want to join the academy too, which it teaches you, there's videos that actually teach you all the steps. Like, from the basic, from the beginning, from being a baby, they teach you the steps. So there's videos that teach you the steps. Oh, what is a pip? How to read, what is a candle? And, all that stuff. Cause sheesh, that one-on-one, repeating here, repeating there, that's why it's much easier to make a video. Boom, here, that's what it is. Watch this video. Boom, you know what I mean? Once they watch the video, they'll have an understanding. It's a little bit easier to say, oh, look, explain, look, this is what is that, that's what is that. I think I'm learning with the vids and demo account. I like someone explaining the basics and then learning by doing. Exactly. Yep. That's what I usually do. Well, I watch the videos and then I just watch the videos and then doing the practice. Boom, 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 boom. And actually looking at the market and doing the stuff. Hey. But yeah, it's fun. But look, I wanna like this movement, since we're watching on the 1 minute, see how there's not much movements. It did movements there. There's movements there. But like I liked it to be on the London session, because on the 1 minute, it can move up and down quickly. So let's say I know GBP. Well, I usually trade a lot this pair, GBP USD. Let's say I know GBP USD is going for a buy all day long for like in the 1 hour or something like that. I look for just straight buys on the 1 minute, because I know if I was wrong, I got in too late, I know in the long time frame it's still gonna go for a buy. So I just gotta wait. Oh, instead of in 5 minutes, oh, I made a couple pips. Damn, in 5 minutes it reversed down. Fuck. But 10 minutes, 15 minutes, 20 minutes later, it was supposed to still come up. So it will still come up and you still make your profit there. Cha-ching! Knowledge of the day, baby. Ah. Let's see if I can find an example here. No, because I don't know exactly what I would call this, if it's just gonna go on a buy or on a sell. But let's go back. Let's see. Let's go back. Let's go back. Look. Let's see right here. Look. Okay. Perfect. Right here. Look. Let's say because this is touching the 30, right? Hold on. Let me put the music. I like to hear some music. Let's say because you see this is the RSI. RSI is the related strength index. That's what it's called, related strength index. But remember, I told you when it's at the 7. Actually, let me pause the music. Remember when I told you that it's when it's at 70 up here, it means it's overbought, and when it's like around close to the 30, it means it's oversold. Like overbought means it's been going green. It been going up too much. And down, oversold mean it's been going down too long, for too much. Or not for too long. It's just too, like, for the power that it does. Whatever. I don't know how to explain it correctly, but like it's just too much. Too much sells order. Too much sells and too much buys. So remember, see how So let's say right here, since it was getting closer to the 30. Oh, it's but this is the 1 hour, right? Oh, and it's close to the 30. Huh? It's oversold. I'm gonna look into a buy really quick, right? Okay. Boom. It closed right here, right? Let's say I got in right here. Let's say I got in right here, right? Let's say I got in right here. Oh no, I said the 1 minute. But see, let's say I know this is at the 30, so I know this is gonna go. It's gonna go up. So in this hour, what hour is this? 8 o'clock. So I know it's gonna go up, right? At 8 o'clock, in the 8 o'clock hour. So let's go into 1 minute. Let's see where's 8 o'clock. What day was that? God damn it. Wait, right here. What day was that? That was 12:11 at 8 o'clock. 12:11 at 8 o'clock. 12:11 at 8 o'clock. 12:11 at 8 o'clock. Damn, that's back there. Jesus. Right here. Around right here. Look at that W. Look at that W. Oh my God. Que lindo, Conchita. Que lindo. See, there's another strategy about I learned about W's and stuff. But see, right here at 8 o'clock. Let's look for the 8 o'clock right here. Boom. Let's say you would have got it exactly in at 8 o'clock, right? Because you say, oh, it's gonna be a buy. It's gonna go up because it's close to the 30, right? You following me, Oliver? Just making sure you following me. Hey, I appreciate y'all 6 fellas in the chat and that's on Twitch. I appreciate y'all fellas stopping by the Santana 90s Gaming, fellas. If y'all new to the channel, don't forget to hit that follow button. We here, baby. All right, so all right, okay, you're following me. All right, so let's say, remember, I said in the 1 hour, it was gonna go up, right? So let's say at 8 o'clock, as soon as you saw the candle close in the 1 hour, you got in for a buy. So that would have been, we're looking right now at the 1 minute. So right here at 8 o'clock, this is the 8 o'clock candle right here. So as soon as it opened, you got in. So you would have got in at 1.3165. Oh, but Jonathan, fuck. 801 is going down. Fuck, it's 801, but it's going down. Shit, 802. Oh my God, Jonathan, I'm still negative. 803, 804. It's still 815. Look, 812. Oh, you see the time clock right here. I don't know if y'all see it all the way in the bottom. All the way in the bottom of this line right here. See, right here, you see where it comes up right here when I'm hovering over the candles. That's where you see the date and the time frame. But okay, so we're looking at the 1 minute. We got right here. We got in right here. Right? We got in right here at 18 at 1.3165. Damn, Jonathan, I got in at 1.3165. You said it was going up. You said it was going up. All right. Okay. Damn, Jonathan, 10 minutes in. Fuck, Jonathan. I'm losing. Let me see right now. It's right here. Damn, Jonathan is at 31.45. I'm losing. How many pips is that? 65 to 45. Damn, Jonathan. I'm negative. I'm down 18. 20 pips. Fuck, you said it was going up. Right? Look at this. We still at the 8:20, at the 8 hour. 8 hour. Look, we got in at 31.65. Let's look for 9 o'clock. Where would it finished? Right here. This candle right here. 9 o'clock. And it closed right here. Which you could have sold as soon as right here. But once you see it going down. But let's say we closed right here. Right? Let's say we closed. We waited 1 hour. Fuck. We waited 1 hour because we thought it was going up. And this is what you're trying to improve on. Your entries. But this is just one example. This is just one example. Because I could give you multiple different examples in just that 1 hour. But let's say, as you said, at 8, exactly at 8, you got in because you know it was going to go for a buy. You waited for that one candle to finish on that 1 hour. Boom. At 9 o'clock, it would have been at 1.3176, and it was at one, and we got in at 1.3165. So from 1.3165 to 9 o'clock to 1.3176. That's 11 pips. Boom. That's a win because you got into a buy. That's a win. But that's just one example. That's just one example. What I look for, I don't do that. What I look for is for position. So like, let's say on that 1 hour, right? How can I, let me see if I can mark it. Okay, yeah, I can mark this. Let me put the lines. Hold up. Let me make some lines so I know where I'm at vertical right here. Okay. So from 9 o'clock right here to 8 o'clock. Okay. So see right here, in this 1 hour, so I know for that 1 hour, it's going to end up positive. For that 1 hour, it's going to end up positive. Oh, did you understand that, Oliver? Just in case. So you can still do long time investments with Forex. Oh yeah. It just depends on the type of trader you are. There's people that trade there's people that trade for months. They get into a trade like 2 months ago and they hold it for a couple months. It depends. Okay, you understand that. Okay. It depends on the type of trader you are. You know, you could be a day trader. It's just the same thing as stocks. You could be a day trader. You could be a swing trader. You could be a long-term trader. It just depends on the way you want to trade. But see, let's say on that 1 hour, what I try to do, I know it's gonna go up, so I just wait. I wait for a good entry point. So see, I would have not got, like right here. I said that the one example I gave you, we would have got an 8. Me, I know it's gonna go up, but I'm looking. I come down to the 1 minute. Okay, so I see it up here, right? The RSI was up here. Oh, I'm gonna wait. I want to look for a better entry instead of, because I don't want to catch. If I would have waited that whole hour, in 1 hour, I didn't want to catch only 11 pips, right? So I want a better entry. All right. So I see it going down, going down. Ooh, look at the RSI on the 1 minute. On the 1 minute. Oh, the RSI is below the 30. Okay. Now, instead of getting all the way up here in here, I could have got in here. When I see it started coming up, right here, boom. I see it start coming up. Boom. That's the entry right there at 1.3149. From from right here, let me mark that too. Right here. Okay, so right there, okay, if I would have got in this entry, because I'm looking for a better entry. Oh, the RSI dropped below 30. Now I could get in the 1 minute. Now I could get in, so I could grab more pips. So I would have got in. Boom, 1.3148. Now I'm riding it all the way to 9 o'clock. Oh, let's see, because I know it's supposed to end up higher. Boom. 1.3176. So now, instead of from here to here, catching only 11 pips, now from here that we entered, here's where it closed. So from 1.3149 to 1.31, what was it, 76? Was it 76? Yeah, 1.3149. Is that 49? Yeah, it is 49. Let me see. Yep. 1.3140, yeah, 49 to 1.3176. You know how many pips is that? That's 27 pips. That's 2 times more than if we would have got in here. 2 times more. And plus some. So that's what are you trying to improve, to get better entries. Well, that's what I'm trying to improve now, since I know what I'm looking for. I'm looking for better entries so I could get more pips. But then, if you want to take it to another level, instead right there, right? So I told you the first example, which we would have got the first example which we would have got 11 pips, right? Let's put it right here. Let me make a thing, a text right here. First example, we would have got 11 pips. 11 pips. All right. Second example that I showed you, we would have got second example. We would have got how much did I say? 27? Yeah, from 39. Yeah, 27 pips. So second example, we would have got 27 pips. Now, you think that's it? There's more. Like, there's so much shit, man. There's so much shit, yo. Yeah, I get it. So you just want to find a good entry so you can earn more. Exactly. But that's not it. That's not it. There's more to it. You still just from that one you could still got more money from that thing right there. So okay, let's see. Look, you see it. First example, we got 11 pips. Right? First example, you got 11 pips. Second example, which you was looking for a better entry, you would have got 27 pips. Now look at this. Look at this. Look at this. You could have got in 2 trades. This is another example now. The same thing as the first one. You would have got at 8. You would have put in a trade for 8 when the first out, because you know that 1 hour is going to go up. You would have got in a trade at 8. And then you would have looked for another one, which would have been this one. Boom. You would have got in another one. So that you would have been inside of 2 of them. So instead of just getting 11 or 27, you could have got both, which would have been 38 pips. You would have got 38 pips. Example 3. Third. You would have got fucking 38 pips. But wait, Jonathan, there's more. Fourth example. You want to see it? Or you're tired? Or you're following me? I love this shit though. There's so many things. Now, like, you're super experienced. Not, you don't have to be super experienced, but you kind of know what you're looking for, and you have the money to risk a little bit in your account. Or you could just, let's say you're doing a 1.00 lot size, you could have done, instead of breaking them down. Let's say I could have put 3 trades instead of just 1 or 2. Let's say I want to break it down into, 1 hour. Let's say I want to break it down to 1.00 to, let's make it even. Or, no, let's make it 3 trades. One at 0.50 and the two others at 0.25. So instead of that, you could have done right here. Boom, you got in at 8. You got in at right here when you seen this better entry. But now you see it keeps going down. Oh shit, it keeps going down, Jonathan. Fuck, I got in right here too at 1.3148. The RSI is still below 30. Oh shit, Jonathan. Fuck, another one that keeps going down. Boom. Okay, now I see it. Oh damn, Jonathan, the RSI is at 20. That's really low. Oh, but it's coming up. Oh, this candle closed. Boom. Oh, I want to get in right there, Jonathan. Oh, shit, Jonathan. I got into another entry. And that's right there is 1.3139. So now, again, we just got into 3 trades. So now we're riding that all the way up until 9 o'clock, right? So from, what did I say right here? 1.3139. So 39 to 76. How much is that? 36. No, that's 37 points. So that's 37 pips. 37 pips. So I could have got all of that, right? All of that. So since I got in 3 trades plus 37, so 38 plus 37. That's 75 motherfucking pips in just that 1 hour. In just that 1 hour. That's right there. Could have been your day. That right there. If you're doing the 0.01, that's $7.50, right? You're doing the 1.00. I mean, doing the you're doing the 0.10. That right there is what did I say? Is $75. If you're doing the 1.00, how much you think is that? Let's see. Let's see if you're following me. A 1 point every pip. Let's see if you're following me, Oliver. Every pip you win is $10. Okay, okay. Okay, okay, let's go, Oliver. Woo! You're following. Let's go. So yeah, so it all depends on the lot size you're really using. So that's why you see sometimes you see people posting pictures that was like, hell nah, you didn't make $1,000 in 5 minutes, or hell nah, $10,000 in fucking one day. No way, you're fucking lying. Or fucking let's say. What, in one day you made $5,000? This nigga is lying. He just did it. Bro, you don't know what we're doing to really say we're lying or not. Like, I just clearly showed examples of how it just depends on the lot size you're using. You know what I mean? That's 6. It's pattern and strategy pretty much. Yeah. Yeah, so right there I showed you 4 different examples. This is the simple way. You know, when your lot size is small, you can use you use a smaller lot size because you do risk management. You don't want to risk no more than 3% of your account size, right? So you don't want to risk more than 3% of your account size, which a lot of people risk a lot more to get more, but at the same time you can lose a lot more. So you know what I mean? So some people risk 1% of their account, some people risk 2% of their account, some people risk 3%. Once you're risking between 1 to 3%, you're good. But there's certain people that risk 10% of their account, 20% of their account, and it's like, you know, you can make money quick, but you can lose it too. So it all depends on the type of trader you are. Because I'm not gonna lie, I have risk more than 3%. So that's why sometimes I make a good certain amount of money, but at the same time I could lose a good size of money. You know what I mean? So that's why you got to keep it balanced. Like, you know, a good risk management between 1 to 3%, because you know you don't want to lose all that money that quick. So that was just one example right there, bro. First example, you could have won 11 pips. Second example, you could have won 27 pips. Third example, you could have won 38 pips. Fourth example, you could have won 75 pips. But that was just an example on the buy on the 1 hour. But that's what, you know, that's what I'm doing, you know. And it's just, and it comes down to getting better entries, identifying, you know, those buys and sells. Look at here, right here. Look at this. Then you see this. Look, boom, it hit here, boom, it hit here, boom, it hit here. That's like what we call like support area. If we think about it as a floor, you know, a floor supports you. A ceiling supports the top. So, you know, we call it like floor and ceilings. Oh, right here. We call it floor and ceilings. Because, you know, a floor supports your weight. A ceiling supports the weight on top, you know. So, you know, if you see this, see how I have a line right here? Look at this. I haven't drawn this line in a minute. Like, I drew that line way back. Because I haven't drew a line in GBP in a long time, right? Let me see if I can find where I drew this line. It was nowhere here. It was not there. Wow, I can't even go all the way back there now. I could go back there, but I was trying to find where I drew that line because I know it was either a support or a ceiling. So I drew that line and look right here where it happened. Over here, it became a ceiling too. Look at right here. It became a ceiling. It became a thing. Boom. It's hitting. It hit it. Boom. See, boom. It hits. Right here it broke, so it went up. It really didn't have enough power, so it came back down. It tried again. It broke through. It finally broke through, so it stayed. It stayed. Lost the momentum, so it broke back down. And right here, fall. Look at this. It hit my other freaking floor. So now it goes up, boom, it hit the yellow line. Found the ceiling, bounced right back. It's gonna try to retest the ceiling, boom. But once it broke, it didn't have enough momentum, so it came back down. So if we keep following that, it might do the same thing again. But look, right here, it broke through. But boom, it opened over here. So it might come to try to test this ceiling again, or it might even break through the ceiling again. Because what it's doing is testing that ceiling and that floor. Oh my God, this is just getting too. I just noticed right now. This is getting easier. As time passed, it's like wow, this is that easy. That's why I say it's not easy, but it's not hard, because it's just the more time you got in the markets, the better, because you start learning stuff, man. That's crazy, yo. That's crazy. Oh man, that's sick. That's why a broker with a good low spread, the lower the spread they got, the better. The lower the spread, the better. The lower the commission you got to pay, the better. So it's just there's a lot of different strategies out there. You try to find good ones, of course, but then between all the strategy you be learning, like I try to get the one I understand. You know, the ones that I find good, but that I understand, that I could see it in the charts happening. Because what was the point of me getting? Oh, this is the best strategy. But me myself, can I identify that strategy on the charts when I'm looking at the charts by myself? So there's no point of that. So you get the best strategy you can, but a strategy that you could identify, because everybody sees stuff differently.